they're all my friends, but yeah, and I do know them all very well. But that's the way I start, and that's the way I interact.
Perfect. Thank you. So in looking at this overall sort of first area that we've discussed, which is selecting the jurisdiction from a structural point of view, the product point of view, it is a product. So it's not just a business that you've set up, but also you're selling a product. And so you need to know your customer, just like anything else. This may sound strange if you're trading and you have been trading a strategy and that's your main focus. And that is obviously the critical success factor of a business in many ways, but also you need to be able to put that product there. The world's full of great products that never got sold, right? So I think what our participants in the panel today have talked about is understanding something that you need to in order to be successful in distributing and selling your product, getting seen, producing the right kind of structure for your client base. So first of all, let's take a look at the poll answers. And so thank you all for responding to the poll. I wonder if we can bring up that poll responses on the screen for the participants today. So first of all, Cayman Islands. Clearly, not only is in situ the full choice, but it's also seen by most of our participants as the choice of jurisdiction. And also second in line, Luxembourg. I see Singapore suggesting some Asian distribution. Malta quite high as well. So that's very interesting to see. And so I guess in terms of overall, none of this is actually different from the chart we saw at the beginning, that people are favoring jurisdictions and the mass of where the funds are have been consistent with that. I do need to push on because we're going to work on the next thing we asked about was deciding factor, and we can see that the investor requirements are the deciding factor, the largest deciding factor. Some, however, cost. That's always important because ultimately you're running a business and you need to make sure that you're running a business within the cost range. So actually costs are slightly higher. That's the highest response. Tax rate, that's relevant. A lot of the strategy has to be that the fund itself should have the least amount of taxation on it so that investors can deal with their own tax structures. So working to make that happen is important. So I think I'd love to get more thoughts on that, but I know we have to go on to a couple of other things. Before we go on, we're going to send out another set of poll questions, and this is actually more about getting investors. So we're going to ask you a couple of poll questions on investors, where you find the investors are based, and getting cap intro in that. So if I could move on and then start to look at the panel to discuss something slightly different, which is actually in relation to running the actual fund. As you can see, fees have been coming under pressure for managers, and this chart shows you that fees are on a decline. They may have stabilized, but they've certainly been on a decline over since the financial crisis and before, frankly. And that's there's a buyer's selection. Buyers have a decision to make, and they have some pressure to apply there. So we can see that. They also need to understand that there are other expenses in running a fund, and all those expenses come either out of your investors' pockets or out of your pockets. But ultimately, that whatever they are, you want to ensure that you manage those. So I'd like to point the panel a little bit more now at running the business and what jurisdictional issues might apply to running the business. So, Clive, I'm going to go back to you and do this in reverse. Operating model. And tell us a little bit about the operating model that managers need to have because they are running a business, and what they need to consider when they are establishing, assuming this is a greenfield, their operating model.
Sure, thanks, Dave. As Dave said, you're not selling performance. You're selling a product from which you deliver performance, and you need to remember that. So it's separating the skill of the investment manager. That's a given as far as I'm concerned. But the investor is looking at your product and how that works and how you deliver that product. So it needs to be joined up. So the first thing is you need to understand your product. Your product is the offering document and a number of other legal documents from various different people that all together talk to the offering document, and you, as a package, that's what you're selling. And you need to know what's in all of those things. Yes, it's very boring, so you need to find somebody who's actually interested in reading them, like me, who will look through them and find all of the deliverables that are within those that you need to be capturing, because that's how you're going to deliver your performance. So having somebody who can understand that is important. Your investors are buying that. So secondly, to deliver that, you need somebody who understands what the portfolio managers are doing. So the technicalities of what they're going to be investing in and how they're going to construct a portfolio. And that's difficult because if you've come from a bank, you could be a trader and you know a good ops guy who works in the settlements area of the bank. You think, well, he'll be handy because he knows all about the trades I do. Great, he knows all about the trades you do, but he will not necessarily understand an investment portfolio. And that, again, is what your investors are buying into. They're not buying into his skills in settlement. So you need a model that can identify how the product works and the providers which will best service that portfolio with the technicalities of the investments that the portfolio manager is making. So you're going to need the administrator who understands you. It's no good getting an administrator who isn't a specialist in FX if you're an FX manager setting up an FX fund. So you need to find out which ones really work best. And FX is actually can be quite a tricky asset class. And all of your trading counterparts and relationships. So somebody's got to understand the investment part to be able to put that phase of the model together. So the third one is, how do we capture all of that stuff, the activity, and link it all to the providers? And you need a portfolio management system, one that can create that relevant portfolio view. That's going to be, everything is going to revolve around that. And the investors are really not looking for you running your fund off spreadsheet. They're looking for something a bit more than that. And that portfolio is going to capture something that your portfolio managers understand. They maybe have come from a bank, so there needs to be something that looks relevant to them and that they will use, because you want them to be putting in their trades, and it all starts from there. And they need to understand that view. And that view is going to link to all of that view, and then the technology is going to link to all of your third parties. So then you can analyze your portfolio properly. And the first stage of risk is seeing your portfolio and knowing the value of it. Simple as that. That's your first level of risk. Because if you haven't got that in front of you, then you're really in trouble. The next level is, of course, applying all of your risk measures and risk tolerances, your compliance, your concentration limits. All of those will be set up in your system. So you're starting to control all of the information from the investments that have been applied. And then really the last tier of all of this, wrapping it all together, is governance. And governance, I don't think of governance as checking on the directors of your fund in Cayman. That's one element of governance. But I see governance as the fund governance, the management of your company. We talked about you are a business. So how's your business run? Because investors are interested in this. Your product governance, how you manage the product and how it operates, and the interactions with the third parties. And the asset security governance, because you don't want to lose assets just through having somebody not keeping on top of it. So governance is the wrapper around all of those three previous sections that I've mentioned. Then you should have a holistic model, and then you want to tell the investors you've got it. So this is my model, this is how it works, and this is how it's joined up. If you put that in front of them, you will stand out.
Yeah. So this is all part of what you then end up being. There's a transparency to all this. But I'm going to turn to Sam now. Thank you very much, Clive, for that. Sam, at the end of the day, there are costs that become very real when we start looking at this. And so one of the issues you pointed out is, as a firm that focuses on smaller managers, of course, there's a smaller amount of money and therefore a small amount of money to pay for these costs. Can you tell us about the hedge fund platform? As you deliver something like that, and what does this do for managers, especially in terms of cost and infrastructure, in order to then provide all these things that Clive has been pointing out to us?
As you say, cost is a really important part of it, because the guys coming to us, they're startups, real startups. They're looking to get an audited track record for their strategy that they may have been trading for the last 2-3 years. So cost is crucial. So we set up in Cayman, also in Malta, but in Cayman, we've got a fund platform there. It's a segregated portfolio company, so each cell is legally segregated, and we can offer the startup manager a one-stop solution. So
Sam, just for people that don't know what that means that you've got a structure that allows you to spread costs amongst managers, but also keep them segregated, right?
Yeah.
So that
a segregated portfolio, which is legally segregated. It operates like a standalone fund. They can call it what they want. It's got its own name, its own offering prospectus, its own bank account, broker account, ISIN code, PAPCA, registration, the whole thing. For an FX fund, we can give them a fund for just under $10,000, and that's everything. That's all the legal work, the agreements, opening bank and broker accounts, and it's legally segregated on an ongoing basis, because the segregated portfolio is part of the SPC, where there's lots of segregated portfolios. We can offer audit costs at a very competitive price, because the audit is the same through the whole platform. And we've got currently 25 sub-funds on one of our platforms. But we can also set up the structure very quickly. Because the corporate structure is already there, we can set up a new cell in 4 or 5 weeks, start to finish. And then the guy can get trading. And it just gives them the opportunity. If these guys are coming in with 3, 4, 5, 10 million, and the money coming into the fund typically is their money or family and friends. They're looking to get an audited track record. So they need a low-cost fund solution for the setup. On an ongoing basis, we offer the administration, the audit, the directors, etc. They're a very competitive price. Year one, all of that, $45,000. And we do indicative daily NAVs, etc. So it just gives them a platform. Everybody, all the institutions, as I said before, they all recognize Cayman. So they recognize that structure as well. And we deal with banks like Barclays. The choice of broker, it belongs to the client. And so advanced markets, in this case, they would choose the broker. We open all the accounts and we monitor those accounts. It's like corporate governance is really important. So we oversee everything. The trader is authorized to trade the account in the name of the fund, but we monitor it totally what he's doing. So he did the strategy. If there's anything wrong, we stop him, essentially. And that's,
So that covers some of what Clive was talking about as well, in terms of you have to communicate that transparency, but also that governance, which is what you've described.
Exactly. We see our role as policing the fund, essentially. We oversee it. We're elected there, but as administrator, we're onboarding the investors. Our main responsibility is to investors. So we make sure everything operates correctly. There's dual signing on bank accounts, etc. So the trader just trades, and we make sure he's regulated. If he's not regulated, he's sitting in the UK, we can refer him to a hosting firm where he gets regulated. So there's very sort of tight controls on every aspect of the fund.
Thank you. So I'd like to move to Rachel now to just talk about we've got a European regulated environment, there probably are different costs there. Can you give us a guidance on how managers control costs in that kind of environment?
Sure, yes. I mean, being in an EU-regulated jurisdiction has its advantages in that, there's investor peace of mind there. It's a heavily regulated sector. It's a more robust and secure environment, if you will. But there's also the added regulatory reporting and requirements that go with it that sometimes can increase the costs over there, especially for a startup manager setting up their first funds. Costs are a very important factor, and even as we've seen from the poll responses before. What we've seen in a way that a lot of managers have managed this cost as well is from outsourcing the functions. Because when they outsource, I mean, I can speak from an administrator's perspective. Previously, we used to see quite a few operators who used to do this role, carry out this role in-house. However, now we're increasingly seeing them outsourcing this function over the past few years. And that is because as an administrator, we invest in a number of systems that allow us to benefit from economies of scope and economies of scale. And we then pass these benefits down to our clients as well. And apart from that, it also allows them just to focus on the core of managing and growing their funds rather than having to worry about the administration, the reporting required, etc. And being in the EU and being such a regulated sector, there is a number of updates that happen frequently on a regular basis to the regulation, guidelines coming out from ESMA, reviews on the current directive. So from our compliance team, we make sure that we remain abreast and ready to adapt our service offering to our clients to make sure that we remain up to date and make sure our clients are compliant. So from that perspective, again, they don't have to worry about engaging another legal person to look at that, a compliance person to look at that, because it's all taken care of already. Then if we look at the Malta perspective per se, I mean, we mentioned the cost efficiencies that come out from the flexibilities of less onerous regulations like the professional investor fund. I mean, over there you can even opt to have it as a self-managed structure, so a leaner structure where the management of the fund is done within the fund itself rather than appointing an external fund manager, because like I mentioned, most of the clients opting for this are startups or are first-time managers, so they wouldn't necessarily have their own firm set up already or be qualified themselves as a fund manager. And all that happens within the structure of the fund itself if they'd like to go for a self-managed option. So that is more efficient on the cost side as well. But apart from this, there's also factors like the cost of living. So, for example, the cost of living in Malta is less than it would be in London, for example. So a lot of clients find that when it comes to appointing local directors or service providers based out of Malta, that the costs would be less compared to other jurisdictions simply because of the cost of living of the jurisdiction. That said, however, I would point out that Malta, being cost efficient, is not a low-cost jurisdiction in terms of the services received and the quality of service providers is still at a very high level. So even though it's more cost efficient, it doesn't mean that it's a low-cost jurisdiction, and actually the service is of a very high quality.
Thank you very much. Living in Bermuda, which is what I would consider a pretty high-cost jurisdiction, I can understand the importance of seeking cost containment. And thank you because you're pointing out the need to really be able to leverage your service providers in getting your cost control. That's a pretty important factor. Mark, I see you as being on the front line of a lot of this in terms of guiding clients in terms of the challenges, the regulatory issues, but also there are costs that go with this, and particularly there are continual regulatory challenges that they need to face when they're operating in a jurisdiction. Could you talk to us about that, Mark?
Certainly. Thank you. Well, I guess I'd start by sort of reiterating what Rebecca was saying about the outsourcing points, because outsourcing is a critical issue here if you are a portfolio manager based outside the EU, whether in Southeast Asia or the US or potentially the UK if there's a no-deal Brexit. And almost all of your sort of fund services are going to be on an outsourced basis, but also the way that we approach this from a sort of fund management perspective, if you have an EU fund, is that your EU sort of fund manager, so your AIFM, which is a critical regulatory component and where all the regulation sits, is going to be an outsourced third-party service provision. And that's where it's a slightly, I mean, the environment in any event is quite unusual from a regulatory perspective for non-EU people coming in. And even for some EU people, there is a lot more regulation. So you have your regulated funds, which are UCITS, where there is vehicular, essentially, regulation. But in the alternative space, so an FX hedge fund, it is actually the AIFM, or the European Fund Manager, that is the outsourced entity where all the regulation sits. Now, I go back to this point about outsourcing because this is where it gets quite interesting, because if you're considering a European fund, you will look at all your service providers and you'll go through your selection process of your depository, your administrator, your PBs, whoever it may be, but also this AIFM. Now, you will pick them, but actually they are then outsourcing to you because they are delegating portfolio management back to you. So there's a slightly strange reversal of I guess, regulatory obligations. They are now obliged to oversee you. And this is the new sort of, well, it's been a regulatory theme for a while, but it's definitely where a lot of the regulatory focus is going to fall on these service providers and their ability to sufficiently oversee a portfolio manager outside the EU or outside their particular jurisdiction. So what that means in practice, well, you can expect going forward a lot more oversight. There might be an increase in cost as they shore up. I mean, the reality is that what happens is if they're in their process of overseeing you, if something happens that is insufficient, frankly, from your perspective and from the fund's perspective, it's probably terminal anyway and points to a bigger issue. So the fact that they would terminate you, and of course, any sort of regulatory issues that there are, when we look at this from a legal perspective, we contract around to put protections in favour of the portfolio manager, but you can only go so far. So if an issue arises, and obviously what you should seek to do is partner up with these firms for them to guide you through any of the regulatory processes. If they can't continue and if it's terminal, but obviously they then have to insource essentially portfolio management. And what that really means is then wind down the vehicle. So it's a slightly strange setup, heavily reliant on outsourcing. It's something to be mindful of. Obviously, if you look at this from outside the EU, it seems very complicated. It doesn't have to be complicated. It just needs to be reduced to simple terms. And one final thing, I guess, coming down, or two final things, I guess, coming down the pipe next year. One is we've talked about non-EU funds, and I know Clive in particular mentioned market access of non-EU funds in the EU, and obviously Switzerland and the UK are jurisdictions that remain open because they are non-EU, although the UK was open when it was EU. Essentially, private placement of non-EU funds will become more challenging, so that will drive more managers towards setting up their EU fund vehicles. But there is a flip side, and there is a consultation underway, and the risk is that that non-EU fund managers will have to comply with more of the aspects of AIFMD if they want to access Europe from outside Europe. Now, there's a threat of that. Do I think it'll happen? As a betting man, probably not. I wouldn't put a lot of money on it, but if the Europeans become too protectionist, they will damage their own funds market. So it's not really in the EU's interest to become too protective.
Perfect. Thank you. As we're getting close to time, I'm gonna pull up the answers to the poll questions, and so the first question there was in relation to jurisdiction, where your investors are coming from, and the answers that we saw, most of the investors are European. I wonder if you can pull those answers up for us so we can see those. Okay, great. Sorry, apologies, couldn't see it myself. And most are European, so half. That's good, and a good Asian Pacific proportion. And then, have you received capital interest from your prime brokers? Well, actually, you could get cap intros from lots of people, but what we're seeing here is a quarter half. But ultimately, there is a significant amount of effort and work and cost to marketing your fund. Don't underestimate that. Please don't. We'll put up the final two poll questions while we answer a few Q&As, if you wouldn't mind. We've had a couple that I think fall into a similar vein, and so I'm going to go to a couple of these. One is in objections to a jurisdiction by an investor. I find that an excellent question, actually. Maybe controversial, might put someone's nose out. So what I'll do is I'll ask Rebecca, do you see anyone that's come up with objections? Obviously, I realize that you're dealing mainly with Malta, but have you seen objections, things that generally need to be considered, Rebecca, in terms of dealing with objections to a jurisdiction?
No, I mean, as we mentioned before, investor preference is very important, because at the end of the day, if I, as a fund manager, I want to set up my fund in Malta or in Cayman or wherever, and my investors are not happy with that, then I might as well not do it, because if I don't have the investors happy, they're not going to put the money in my fund, then I'm going to have to go elsewhere. So no, that is very important. I mean, as you mentioned, I have most of my experience is with the Maltese jurisdiction. So it's already with fund managers who would have aligned with their investors, and they're happy to do so. So no, I can't say personally that I've come across massive objections towards that. There is a preference sometimes between offshore and onshore, as we've already mentioned in the panel. But other than that, there's nothing I can contribute here.
No, it's important. You've pointed out another important thing, which is people have already aligned with their investors. A point Clive was making, that is, you really need to understand what your investors are looking for. I think all the panelists have identified that. And just before I talk to the last question, some of us will join in the chat room after the meeting. If you want to be there and ask any other further questions, please do so. And a final question, which is usual mistakes, which I'm afraid we've covered the best practice that our panelists believe. Usual mistakes. Clive, you have all of 30 seconds max, 15 seconds. How about that? To answer that, Clive.
Yeah. I would say going to market with something that's not ready. If you don't understand your product, if you haven't checked it through, if you haven't checked the validity and the inherent connection within the product, then somebody will find you out. So do your homework, lift the hood before you go to market, look what's under there, make sure it works, and then go out. But that's a common mistake, and you only get one bite of those investors. You know, if you miss that chance because you hadn't done that, you won't see them again. You're dust.
Sam, do you have any thoughts on that? Mistakes people make?
I think generally all the managers come to us, they've never set a fund up in their life, so they don't really understand it. What they find is, in the past, have been managing their own money. Managing investors' money is totally different. It's a different psyche altogether. It comes with a lot of issues, and we've had managers just cannot hack it because they've got restrictions. They have to stick to the strategy. If it's their own money, they can do whatever they want, but if it's somebody else's money, it puts a lot more pressure on them. And we find some managers find it very difficult. They don't understand it until they start doing it. But there's a lot of pressure.
Thank you. Panelists, I want to thank you. More importantly, participants, we genuinely are pleased that you were here to listen to our discussion on this. Thank you very much to Advanced Markets for putting this together. Some of us, as I said, will join in the room. As a final note, from my point of view, the product is the fund that your business is going to use as its product is sale, and you need to understand it just as well as any marketing process would be understood. You understand all the costs and benefits, and also the structuring. Everything about it is important. And we're now in a very institutional, professional kind of world in the fund industry. That's changed considerably over the last 25 years. So just understand that you will have to be very clear and transparent about what you're doing. Get some advice from people that know. And the last point I'd make is in the industry, we have service providers that perform every single aspect of this industry. And so you should be able to gain knowledge and be able to make decisions based on getting good advice from various firms in the industry. Ask people, and certainly our panelists are all people accustomed to giving advice and guidance to managers as they set up. Our final poll question responses are up there. And most important, risk management, risk-adjusted return, very, very important for your client's evaluation. And PM system, everybody believes it. Everybody believes that you need a proper portfolio management system. So for my part, I hope you listen to that and certainly give us a call if you're interested in that. Very good. Thank you, guys. Thank you very much for attending. Thank you.
Thank you, Dave. Thank you to everyone for making that such a lively and great panel of discussion. On behalf of everyone at Advanced Markets, I would like to thank you all, the attendees, panelists, and Dave, our moderator. If you would like to continue any part of this discussion, you can do so with some of our panelists who will join on our group chat, but please feel free also to reach out to your Advanced Markets representative. Thank you again, and see you next for our second panel, which will discuss technology for currency hedge funds at 1 p.m. GMT, about 25 minutes. Thank you.
Thank you.